Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday market webcast. Okay, Bollinger Bands on the daily chart are still tight. We've got CPI 830, so it's about 740 right now, Eastern time. 20-day simple moving average middle Bollinger Band is held as support basically over the course of 4 sessions. You see the 9-day becoming support. Right now we're trading around 44.85. You know, this is going to be another short and sweet webcast because you've got, before the number and after the number. The reactions to CPI have not been as violent as they have been, say in 2022, where we were getting these 120, 140 handle 3-minute candles, just like, it's just absolute crazy town. But what I would say is if the reaction to this number cannot turn this green line into resistance, it is going to be very difficult for the bears, for the short side, to avoid a higher high than 44.98 from back on June the 30th. Now, whether that has a whole heck of a lot to it beyond that remains to be seen. But it's not that they have not had their chances to convert the 20-day. And what I've typically seen over the last 10, 12 years is when the tape gathers itself like this on the daily chart, when you have compression, head fake, band ride. Now that could go the other way. Head fake, band ride. If the CPI reaction cannot put price back in between middle band and lower band, then upper band is, pretty much inevitable. And right now, upper band on the front month chart is 45.05. Last time I checked, 45.05 is more than 44.98. So that's where I'm coming from there. Hourly chart. You took it out by 20 handles. 20. It's not like you kissed it by a couple of handles. You spent 4 hours turning it into resistance. You took it down. Then you got back up. And then here, about noontime on Monday, that was just awful. So if they end up getting run up into the 4,500s and we stay there, one of the areas I'm going to look at is right here. Right here. Where was the ball dropped? Right here. Lower low. Lower low. So when people say, oh, the tape is this, the tape is that, the bears is this, it's like, look, moments like this is why the short side tends to not be able to have nice things. You had it. You had it. But price being the forward-thinking mechanism that it is, and whether this is and you have to call it a walk-up into CPI at this point. This is 3 days now. Whether this is ill-advised or not, price will tell us in about 45 minutes. But if the number doesn't take out, and now if you're the bears, you got to take out a lot of stuff. You got hourly mid, 9-day, daily pivot, which is not a big deal, weekly pivot, which was a big deal yesterday because you couldn't get it done, and then right back down 44.40, which is your current daily 20-day simple. You got to end up down here. You got to close down here. Otherwise, you're going to have this little head fake down, rejection. You take out whatever the Globex high is at the time, and that exposes you to 4,500 and beyond. Just it is what it is. All right, that's all I got. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Let's see what CPI says. I will catch you guys tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.